the entire system has shifted. And what worked then no longer works now. And the people who are stuck in the middle between both systems are getting, for lack of a better word. Hi, everyone. Welcome to Twin Shores Financial Biweekly Market Updates, where we share what we see in the traditional and digital markets. I'm Alex Kaminer, the host, here with Tim Nihill, our founder and CEO, and Alex Krieger, our digital markets analyst. We will be talking about today's big topics, including an update on First Republic Bank, 401ks, and a correction that's happening in the crypto markets right now. We hope you enjoy the content, and if you do, please like, share, subscribe, and comment down below any questions that you might have. Tim, off to you.
Fantastic. Thanks, Alex. Appreciate that. Hello, everyone out there. Thanks for your time and for listening in on our bi-weekly update. Yeah, it's kind of hard. I was in Florida for the past 2 weeks because it's traveling conference season, and now I'm back up in New England, and it's 40 degrees and raining. I miss the sun.
How do you feel?
So yeah, a couple of things that we're seeing in the markets that are somewhat new, but a lot of it's just more reinforcing information to what we've been talking about, I feel like, for the past couple of years. So I guess we'll start off with First Republic and the banking system. So First Republic is still in trouble, and people are starting to realize that as much as the venture capital and crypto industry was to blame for bank failures like Silicon Valley Bank, et cetera, First Republic, the reality of the situation is now coming to light that our banks have what's called a duration problem. It's a duration mismatch. So it's basically when liabilities come due before assets, and that means that the banks have liabilities that they have to pay, and they're going to have to liquidate capital assets in order to pay for those liabilities that are coming due, right? So if you think about it, let's say you take a loan out for 5 years, and then you, I don't know, buy securities and make investments that have a longer duration of 10 years, and all of a sudden you get to the 5-year window and your loan's being recalled, and you need to pay it off, and basically you don't have the assets and the money to do so because your depositors have now moved money out of the bank and into money market funds and brokerage accounts and all that fun stuff. I think that's probably a layman's term and summary for what is actually occurring inside of the banking system today. And on top of that, we're looking at, I think, overall deposits in banks are down 5% so far this year. We talked earlier that deposits only have to go down about 3% to probably create a run on the banking system. And we're seeing the Treasury Department step in as well to help keep things afloat. So if you're looking at all of the different stars and how they're aligning, we're having trouble in the banking system. We're having trouble with the fiat currency system and the US dollar, because that's coming under question. And then on top of that, you have in June, the FedNow program is being rolled out. For those not familiar with FedNow, it's basically we're all going to be banking with the Federal Reserve Bank and the U.S. government, and not your local regional banks, be that as it may. So, and then you're having the problem with especially the local and regional banks outside of the big four. So if you're looking at how the stars are aligning and some of the other stuff that we're seeing behind the curtain, I would say by March of next year is probably the end of the rainbow. And I can't remember, and I've been doing this a long, long time, I can't remember so much bad information that's out there. And most people only see what's on the balance sheets, and they're not seeing what's off the balance sheets, which we have a massive, massive financial system problem. And I think we don't have anything we can do to fix it. And that's the crux of it. The U.S. is bankrupt. Everyone's saying, oh, we're the baddest country in the world. We're not. If you look at BRICS, which is what Brazil, Russia, India, China, Saudi Arabia, the BRICS nations GDP, global domestic production or product, is now 30% of the world economy. No, 31. And it just passed the G7, which is basically the big boys, US and some European nations. And some more research and information is basically the BRICS is going to account for half of the world global production. So the United States is no longer the big boy in the market and the big boy economy across the world. And as Russia just demonstrated and highlighted to everybody that, other countries are tired of the military complex of the United States and what would be termed as the weaponization of the US dollar. And if you're not familiar with that, it's basically, if someone doesn't use the US dollar, we bomb them. That's the crux of it. This all ties into the economy because the United States has had its luxury and its day in the sun. And now you have just the rest of the world has grown up, if you will, and adapted. And quite frankly, they're like, listen, we just can't deal with the current structure because it's just what's in place today just does not fit with the growth of other countries and especially much larger populations across the world. So the shift is on and it will continue. So as it applies to the financial markets back home, it doesn't matter what the equities do, quite frankly. You really have to pay attention to what the bond markets are doing, and the bond markets are broken. There was a 40-year bull run in bonds, and now, that day's over as well. So it seems that we're going to be going through a massive, massive repricing. And from what we're seeing, that's going to translate into every asset class, every sector, probably across the globe, and especially here in the United States. Now, the biggest question is, what does this look like? So as an investor, we talked a lot about the gold and silver and the commodities trade, and basically, if you think of it almost like a hot air balloon, where the balloon part is the financial assets and the financial economy, and the real economy is the little basket underneath the hot air balloon. Well, the hot air balloon popped, right? So everybody knows what happens when a hot air balloon pops. It just falls. And we expect that to happen across the board. So we wouldn't be surprised if we, as we've seen some gold and silver and energy commodities go up, we wouldn't be surprised to see a dip, but then it will be a quick dip, and then I think the commodities and the real markets are going to do very, very well, but there is going to be a pain point coming soon. For anyone out there who, is into physical gold and silver and all that stuff, you can try to time that. And this is one of the biggest trades I think we're ever going to see. You can try to time it if you're trying to buy physical silver and gold. The issue is going to be, from what we're seeing, is you're not going to have the ability to buy it. There's either going to be a shortage of physical gold and silver, or you're going to be restricted from the government for buying gold and silver physically. So if you haven't gotten the physical side in play now, you might not have the ability to do it on this next cycle that we're seeing.
Well, go to look and see what the EU just did, right? No transaction, any transaction over $1,000 in cash has to be recorded or is banned. So you can't even buy an ounce of gold.
Yep, there you go. It was funny. I was watching a video today. Is it Stanbury Research? There's a Daniela that's out there. I like to follow her stuff. But they were talking about that. It's our issue is Washington, D.C. It's simple, period, end of story. And this country has been mismanaged for a long, long time. And trust me, it's not going to get any better in the current way it's going. And this affects everything. So the other thing that we're working with a lot of people on is the 401k world, right? How many people in this country are putting money in the 401k that's coming automatically out of their paychecks?
Probably millions.
Right. So Millions of people are putting their money into something that's not managed. It's it. Simple end of story. Nobody manages your account for you, right? So the issue is, I think the 401ks are going to get beat up really bad in this.
Well, and that's the problem that we're seeing with 401ks, is that nobody's managing it. And that's the reason why it's going to get beat up, is because when you have markets that are just inherently going to be going down, of course the 401ks are going to go down with it, because nobody's saying, oh, the market's going down, I should take the money out of this ETF. And,
And it's not even that. It doesn't even have to be less or, as tactical as that, because even in a target date fund, there's no one managing that. What they do is, and I can tell you as someone that worked with the team that invented these things, they look at it and they're like, okay, what's our sales number? Are we going up or down? Usually it's going up, but they're looking at how many plans that the target date is the default on, right? Like that's the magic number for Fidelity, BlackRock, Vanguard, is they want the default. So it's a competition for them to earn the default spots in 401k plans.
Right.
And when they start losing on performance, guess what they do? They change their allocation or they change their glide path. And then they say, hey, here are our returns. And they're competing based on that. But there's no one behind. There's nobody managing 401ks. It's very rare. So we're just trying to help people. Everybody who really needs to look at their 401ks right now. And you just, as limited as they are, you got to do what you can to just make sure you're in the right spots and the right asset classes and are comfortable with riding out this next wave. Because for, I would say, about the past 12 months, it's been much around the lines of, we know that we're about to get hit by a tsunami. The question is, when is the tsunami going to hit? And with some of the things I've seen over the past couple of days, March 2024, it's going to happen. We're in this now. It's 11 months, and I think it's going to be very interesting. And there's a reason why the Federal Reserve Bank is rolling out the FedNow program. There's a reason why people are talking more about central bank digital currencies. There's a reason why universal basic income is getting talked about. Because at the very, very top, I think they know their game is changed. And they, you look at the stuff from the World Economic Forum and all that stuff, it's here. So,
and AI's taking a lot of jobs over.
Yep. We're probably under in one of the most transformational times, I would say, in history, because I don't think this is a transition of just finance. It's more one of those golden age transformations, if you will, right? Like we talked about. No, we're moving away from the old industrial military complexes and into an age of information and knowledge. So you have to think about, as an investor, what's that future going to look like? Because, as our friend Chris Galizio said, and after doing so much homework on this, I think he's spot on. Him and a bunch of other people are dead spot on. Like, if you play your cards right and understand what's really happening, you do have a crystal ball. And you could just look at investments and you just see where to put your money, and then you just got to sit and ride it out a little bit and wait. But it can be a very, very profitable time. So we're just telling people, like, we're going to be really getting into the thick of things in the next 3, 6, 9, 12 months. And, the clock ran and pretty much has run out on being able to put yourself in the right position. And it's, if you've done that, then you're sitting pretty. If not, you're not going to want to look at your account statements. The other thing that I think is really big right now that people are finally starting to talk about is, okay, recession. We know we redefined recession last year, which means we're already in one.
Right.
The question is, Is it going to be another Great Depression? That's really what when you see people that have been in this business for 20, 30, 40 years, and when you look at what's happening, I mean, it's just laughable. It's just hard to believe that it's happening. So, people think of Great Depression and they think everything goes to zero. But there's more than one type of depression, right? There's an inflationary depression. It happened in the Weimar Republic before Nazi Germany came into power. And if you look at Weimar Republic, they were the most educated people in the world. Yep. There are a lot of similarities between 1920s Germany and 2020s United States. Like eerie similarities. So in Weimar, they had an inflationary depression. We know that the Federal Reserve cannot fight inflation anymore. So, it's going to get interesting for sure. How about that for a little doom and gloom? My apologies.
Yeah.
But there are opportunities. If you do your homework and are working with the right people, and you're invested properly, you're not worried about it. You're concerned with what's going to happen to the overall society and in the next side of this. But if you're prepared, if you're prepared, you have the opportunity to invest and find some fantastic opportunities.
The issue is the average American is not invested properly, nor can be. That's another issue.
Yeah, I mean, you have asset allocation has been watered down to mean stocks, bonds, and cash. That's not asset allocation. You need equities. Bonds, yes, some, but you need real estate. You need franchises. You need commodities, right? You need real assets. Like, that's true asset allocation. And that's probably been one of my biggest critical points and criticisms of a lot of the stuff that's happened with the CFP and the training on that. But right, you're right, Alex. Like, that's why the 401ks are in trouble.
Right.
The other thing too is we talked about the office space, commercial real estate, office space.
Yep.
That is a $20 trillion ticking time bomb. And we have a lot of leases on a lot of buildings in this country that are coming up and need to be refinanced. And their leases right now are at very, very low rates, even maybe close to zero. And now they're going to have to refinance at rates that are, maybe double, triple than what they had 10 years ago. That's going to be a massive problem. And it's going to be a massive problem for the banking system. And the other thing that we see people talking about is, I'm just going to convert office space into apartment buildings. And you cannot do that because the way the buildings are designed, they're not designed to have thousands and thousands of people living in them full-time in homes. So in order to convert a lot of office buildings into residential space, they probably have to be knocked down.
And think about it like that.
Or do communal style bathrooms, right?
Right. Because you don't have enough plumbing.
Or the heat. There's no stove unless they go electric. There's no gas probably, so you'd have to go. Yeah.
Right. And I think about it like when I worked in the Hancock Tower in Boston, it was an open floor plan. So how are you going to take an open floor plan and then put up walls? And then you have the weight distribution issues, right? Because the building's not designed to have walls and pipes everywhere. It's an engineering problem. So that one's being talked about a lot. And that's why I'm happy we have our friend Allie from Apollo Global coming on to our podcast, which we're going to release soon, because she'll be able to share insights from one of the largest asset managers and real estate management teams in the world. And she'll have a good amount of insight on that.
I think that's everything that we had to talk about for the traditional markets. Alex, what are you thinking about the crypto market? What are we seeing?
We had this nice correction over this past week. Finally, we hit 21 around the beginning of March 14th. Had a little bit of a correction down $300-400 a week or two later. It was the correction we were talking about. We could see a little bit lower. I could see maybe, let's do the weekly, the daily chart. Could see around 1680, 1700 for Ether, and then BTC would be around 25 as the final correction leg down. And then see a nice cup and handle, and by June, end of this month, beginning of June, see a rotation back up to pumping with the, like Tim was talking about earlier, commodities and other asset classes are going to have a whipsaw down, and then you're going to see them take off. So you're going to probably see this minor correction, and then you're going to see these assets start to take off. BTC, Ether. I think it also will be a weed out process. Some of these alts will start disappearing as they choose what, due to regulations coming up and figuring out what they want to do.
Didn't Coinbase just sue the SEC for regulations?
Correct. They're not giving clear guidelines. They're getting Wells notices, and these companies have asked for clarity on regulation, and the SEC just keeps kicking the can down the road and giving them shenanigan answers, right? Not clear on what way to go and what is what. And I think it's funny, XRP, during this whole lawsuit, when it was considered a security, it was instantly removed off of all exchanges, U.S. exchanges, and halted trading. Last 2 weeks, Algo, Dash, all these different currencies, cryptocurrencies were called out as securities, but they're still trading on Coinbase and Kraken and Gemini. Like, why is that? How come XRP had it turned off right away?
Interesting.
Yeah. So another interesting thing that happened over the week is Russia finance minister says new payment system will allow unrestricted use of cryptocurrency for cross-border payments my guess is to get around sanctions and other things, but they've already been trading oil and other commodities and stuff in the yuan.
Is there a benefit to them doing that outside of the sanctions?
Easier payments. Well, I don't know how long it takes them to send $100 million through whatever system they're sending, right? They're not on SWIFT, right? So I don't know what system China would be using to send 100 million yuan or whatever.
They just have guys in Jeeps driving $100 million worth of ruble over the border.
You could see it. You could. They're doing a lot of major deals now, I heard, in the yuan, right? So you'd have, say, Saudi Arabia, or I forget who it was. There was some big country that did a oil deal, right? You're going to build the infrastructure, and the infrastructure, the facility will be built in, and they'll be paid for in the yuan, not in the US dollar.
Yeah, I think that was Saudi Arabia or Iran was doing it.
Yeah.
But that goes back to the whole point. I don't know if people understand this or not. The way it has worked, and it just happened with Russia, is when the U.S. sanctions another country and the other country has their reserve assets in the United States dollar, they yank their dollars from them, right? So picture having your bank account completely closed and your money taken away by the United States government.
Yeah, no different than what they did to Kanye, but just think of it on a global scale, right? You're a bank, and they're like, "Hey, nope, can't have it." You're a country with the IMF, their own bank in their country, and they take their dollars back from them, in a sense.
Yeah. And that's the biggest concern. I'll be quite frank. I'm not banking with the U.S. government. I don't want to bank with them, right? Oh, they can all of a sudden say, hey, and they're doing it in China, right? Oh, you don't have a high enough social credit score, so therefore you don't have access to your digital yuan, or you have to spend your digital yuan, in a certain amount of time, or it expires.
Correct. You can't get on the bus today. You used your carbon credit score too much.
Right. So we're definitely in a world where it's a tale of two economies. So it's just interesting to watch some of these dynamics play out.
I would agree. I would agree. But I don't know. You got to think this has been going on for years. There's ways around it, right? They're not stupid.
What about Gary Gensler was in front of Congress last week, wasn't he?
He was. He gave a runaround answers about everything. Didn't really give, like you said, clear, like I was saying, clear guidance on what are regulations and going to be for the U.S. And you see a lot of U.S.-based companies looking at leaving the U.S. It'll be interesting for crypto in the U.S. in the next, I would say, 12 to 18 months.
You know, the earnings reports are coming out and the earnings estimates for the rest of the year. And there are some numbers that are coming out in the mainstream media that a lot of us are looking at and like, in what world?
Like, how did you get these numbers?
Real estate's going up 8% this year. It's incredible.
It's gone up because none of the big REITs can pull out their money. None of the customers can pull out their money. So it has gone up 8%.
That's because they're locked in. Hey, that liquidation program. Yeah. Yeah. Well, and that's a big problem with a lot of the publicly traded REITs, right? Like, you only have a certain amount of liquidity, and if you get a run on liquidity, they're just like, no, we're not going to give it to you, because if they do, the strategy goes bust. And that's why in the alternative world, and maybe we should talk about this a little bit more too, because a lot of the private deals are for accredited investors only, which means you basically make, what's a single number? Well, like, let's say $200,000 a year in income, or have $1 million in savings. That's another area where I think a lot of reform is needed, because there's no reason that those numbers should be that high. And there's no reason that you should not take into account the expertise of the client, right? Like, you're trying to tell me if I have someone who works in finance that wants to get into private deals, and it's, he's not accredited but can put money in, you're going to tell him no?
Yeah.
Because he doesn't have $1 million in the bank. And so the accredited thing, I think, there's talks of being revisited, but that's an investment problem that we have and a restriction that we need to take a look at. And the other thing too is, the other side of it is, if you have, it doesn't really matter how much money I guess you have, maybe it does, but if you have under like $1 million in your net worth, you shouldn't be tying up 75% of it into illiquid assets. And what I mean by illiquid assets is assets that you can liquidate immediate and have access in cash, right? Like, a 401k and an IRA account is not a liquid asset. Right? So there needs to be a lot more education there. And the problem we run into as an industry is some professionals tend to overdo it. Right? Like, we have our disclosures with our people on our general rules of thumb. They call in FINRA, it's a 5 and 20. No more than 5% in one alternative asset with 20% total in the portfolio. You can go higher, which we like to do, but we do have disclosures signed by the client because we like to do that. We're closer probably to 30, but you said 20, 30, maybe even 35% of your portfolio can and should be in alternative type assets that have less liquidity. But once you start breaching 50, 60%, I mean, that's just, unless you have $70 million and you're carrying $35 million in the bank, go have at it. Throw $35 million in whatever you want, right? Because I wouldn't know what a $35 million lifestyle would be, but sounds kind of cool.
Right.
But that's just a general rule of thumb. There's some work to be done there too, because that's part of the problem that Cameron, you talked about with people not being invested properly, is the system has shut them out of it.
Yeah, I mean, the people don't teach about this stuff unless you were going into the industry. But the truth is, every single person in the United States needs to know how to invest properly or how to get somebody to do it for them. Because at the end of the day, what are you going to retire on? People aren't going to work till they're dead as much as some people might want to. It is just not feasible.
Right. That old game of working until you're 65, 75 and then retiring is over.
Right. And
there's not. Yeah, go ahead. Sorry.
I was going to say that's because people didn't realize, like, well, the entire system has shifted. And what worked then no longer works now. And the people who are stuck in the middle between both systems are getting, for lack of a better word.
Yeah. They are. It's the in the middle and it's going to be a massive amount of people that are caught in the middle. I think a lot of it has come down from an awareness that people have developed, because a lot of younger people are looking at, I mean, look at what governments are doing and having some authority figure tell you what to do and how to live your life. I mean, look at schools now. I talk about this with friends of mine and, other parents, mothers, fathers, or whatever. And they're like, school is just a waste of time. But for the first time in I don't know how long, you have generations of people that are now standing up and saying, hey, no, we're not doing that anymore. Right? And that's changed the dynamics of finance, and it's changing the dynamics of investing, because people are now looking at, they're saying, yeah, wait, why would I save my money in a 401k, lock it up for 35 years, 40 years, and then pray I have a good amount of money in it? And then at that point in time, should a major life event happen along the way, the whole thing's destroyed, the plan's destroyed.
Yeah.
So, and I don't know anyone that says, oh yeah, I want to work until I'm 75. It's more like, I'm going to do what I want to do and that I love to do, and then figure out how to align my finances to support that and give me the freedom to do it.
Well, I think that's everything that we had planned to talk about today. And we are ending on another gloomy note, but unfortunately, that is the world we live in today, in the financial world we live in today.
Right, but I mean, now you're like, oh, how can I retire when I'm 50?
Right, which we can help with. Just listen to our new podcast, Financial Freedom, and you will get information on how to become more financially free.
We like that.
So on behalf of Twin Shores Financial, thank you all for tuning in. If you enjoyed it and want to stay up to date on the markets, please tune in every other Thursday for all your financial information. Please don't forget to like, share, and subscribe. If you have any questions, please put them down in the comment section down below. Tim, Alex, any last words?
So not your keys, not your coins.
Do your homework, invest wisely.
There it is. Thank you all.